Hey traders, Justin Bennett here with Daily Price Action, and in today's video we're going to talk about the double top pattern. Now the double top pattern occurs after an extended move up, and it's characterized by, as you would guess, two double tops. Now the first thing to note here in this Euro USD daily chart is that we have a move through resistance. Okay, so we have resistance back here. The market then breaks through resistance and it forms the first top. Now the market then retraces back to new support, right? Old resistance, new support. It then makes another attempt at this high. All right. Now, as we know, an uptrend is defined by higher highs and higher lows. And the fact that the market stalled here tells us it's our first signal that we may have a double top pattern on our hands. The market then falls back to support. This is also called the neckline. Okay, so the neckline is simply a previous resistance area that now acts as support. So the market comes back to the neckline, and as it forms these lows, it's important to note that this is not yet a confirmed double top. Okay, so what confirms this pattern is a break below. So again, we're on the daily chart here. So what you would want to look for is a daily close below this level. And we got that on this bar here. So once again, we have the market breaking through resistance. It forms the first top. It then retraces to new support. It then tries to break through this level and is unable to. This is our second top. Okay, so this is number one and this is number two. It then falls back to the neckline support area, and we want to wait for a break below the neckline. Okay, so let me just clear this off here, and we're going to talk about where the entry comes. All right, now once again we have our confirmed double top with a close below the neckline. Now a lot of people like to just go ahead and sell at market right here. Okay, so as soon as the market closes below this level, they like to sell here and place their stop up here above the neckline. And you can do that, but what I actually like to do, 9 times out of 10, you're going to get the market come back here and retest the neckline as a new resistance. So what I like to do is actually sell on a retest. And as you can see, if we sell up here versus selling down here, we can get a much more favorable risk to reward ratio. Okay, so as you can see, as soon as the market tested the neckline as resistance, it sold off aggressively. Okay, so let's talk now about a measured move. And what a measured move is, it's simply a way to identify a possible target after a double top is formed. Okay, so the way we come up with a measured move objective is we have our two tops here. We take the distance from the top to the neckline. All right, and in this case, that's about 270 pips. We then take 270 pips and we measure to a future point lower in the market. And as you can see here, that gives us about, let's see, we've got about 1.342 or so. All right, so I'm going to mark that level. Now, as you can notice, the market did actually sell off lower after meeting this measured move objective. It did sell off lower, and that's why I always say to use this as your profit target number one. Okay, so if you're gonna scale out of a position, the measured objective is a great place to look for your first profit target. All right, so once again, we have from the top to the neckline is approximately 270 pips. We then measure from the neckline to a lower point in the market, which is also 270 pips. And that gives us our level here. So this would be our target. So as you can see, if we had sold up here with our stop above the neckline, and we're targeting this area, this would be an extremely favorable trade setup. All right, guys, so I hope this video has helped. These happen quite often if you look for them, and once again, they can be extremely profitable. So take care, guys. Good trading out there.